Good morning, everybody, and this is your S&P 500 setups for today. So CPI data came out yesterday, slightly better than expected, and of course we continued to rally. Now, if you watch this on the weekly, you can see we were sort of stagnating, and then all of a sudden we are clearing some weekly structure, and that is this area right here at 4300 or 4332. You can see it's a previous swing high. Look left, look what's happened at this area. So we do have a gap just above us, right over there, which should get filled today. So today, or tonight rather for us in European time zones, is the Feds. And what that means is the Feds have been in their 3-day meeting, and they will come out this evening and tell the world what they think they're going to be doing. So, and it all relates to interest rate hikes. So at the moment, the perception is that the interest rate hikes are going to come to a halt, and is based on the inflation data that came out yesterday. So that would be the sentiment that we have in the market. Okay, so understanding that is fairly important, but there are a couple of things that you need to be wary of. So the first thing, on the 8-hour, trend is up really strong to the upside. We are deviating from the 155. You can see the gap here, which is quite large. And then the other thing is we've got this very tight grouping of the oscillators here at 96.96. So obviously the scale is 0 to 100, so that's right at the top of the scale, which just, it doesn't indicate that there's going to be a turn. It doesn't indicate that we're at a top. It just indicates that we are extremely overbought and you need to be cautious. So looking at the 3-hour, we have pretty much nothing going on the last couple of hours. We do have a bit of a hanging man here with the oscillators grouped to the upside. So that's something you need to bear in mind. And there's nothing really else there on the 3-hour. So if we start drilling down onto the hour, you can see we are, for some reason, and I cannot figure it out, we are hovering around this 43.70 area. You can see we battled with it most of the session yesterday. So you know, this wasn't, it was just, this was on the data, so it was the hour pre-market where we rallied, and then we went straight into this area, and then we just went up and down, up and down, up and down, up and down. So there was an opportunity to buy into this, and that would have been right here. So let's just get a level. So you can see there is a level of support, and we're on the 15-minute with a big pin bar on there. Touched it quite nicely and then rallied. So there was a slight opportunity here, but you would have been held up. And if you're still in it, you're still held up. So I don't think anything else is going to happen today until the Feds have come out. You're going to be better off watching what's happening on the DAX. So for me, I mean, this 43.70 is something critical, and I really do not see why. The second level to the upside, and if you scroll back to the left, you can see it's this area here. But granted, there's 2 touches there, but I've seen better areas of resistance than what that is. I suppose maybe if I go back further, you can see a little bit more. But yeah, normally, okay, I take that back. You need to go quite far back to see what's happening there. But nevertheless, I would have expected something closer to price that would be impacting it. So I would have expected something in this area or here somewhere. But anyway, it is the market's pointless trying to second guess it. So let's just run through yesterday. So you can see this was the data. The data got released on this bar, started swinging down, and then to the upside. So you can always anticipate kind of which way it's going to go. You can see we're in an uptrend above the 155. Oscillators grouped to downside. So really there was an opportunity there. There was no real structure there to the left that we were looking for. So you'd have to look for the closest one, and that would have been right here. Now, if you just drop down to the 5 minutes, always an option as well when you have data. Look there. There's your level, and there's your pin bar. And you've got quite a bit of structure to the left. I mean, you can add any levels as you want, but typically we look for 3, and you can see that's the zone, that's a pin bar on it. I'm looking for a long stop is right here, so it's a 100-point stop loss, but yeah, you would have barely got 100 points out of it. Okay, so anyway, that's kind of my view at the moment. Sit on your hands, wait for the feds. Don't try and second guess this, because I suspect what's going to happen is we're probably just going to range like we are now. We are in a bit of a triangle consolidation. Trend is up, the bias is to the upside, so I wouldn't be too surprised to see us have a very dovish Fed, which would basically mean we're looking for a move to the upside, and this gap here is the first target, so that is going to be 43.91, and then you'll be targeting 4,400. So we're kind of back in that targeting 100 points at a time. So from 42 to 43, and then get through 43, 44. So last year, was it last year? No, the year before, I think. Year before it was 200-point increments that it was moving in. So anyway, that's kind of my view at the moment. Just sit back, wait for this chaos to finish, and then you should be able to get some setups to the upside. Get your levels drawn in. Give the Feds, if you are going to trade late tonight, give them 15 minutes, but I wouldn't bother, because the only people online will be the US. The rest of the world will be offline. So you'll probably see the impact of it quickly going to right off the Feds, and then it would continue in abundance the next morning. Hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.